Hello everyone, on behalf of the Market 360 advisors here at Stewart Peterson, I'm Bob Davenport and this is your Dairy Week in Review for June 14th, 2013. Taking a look at Class 3 futures at the settlement of Friday's trade, July closed out the week at 18.03, posting a 55-cent loss. August closed the week at 18.52, down 53 cents, and that puts the 2013 average at 18.11 at the end of this week, down 12 cents. In the cash cheese sessions this week, blocks settled at 172 1/4, down just a quarter cent, and barrels settled at 177 1/4, up just 1/8 cent on the week. That puts the block barrel average at 174 3/4, down just a 1/16 cent on the week. Let's take a look at the weekly block barrel average chart. If you recall from last week, we did post a nice outside weekly bullish reversal last week, but we struggled to really add anything to that this week. The cash sessions were a lot quieter this week with a lot less volume trading hands. During today's session, there was just 2 offers in the blocks with no buyers willing to step in, and there was no bids or offers in the barrels. Again, the block barrel average lost 5/8 cent this week. However, as long as we can hold above last week's low, we should have another shot at testing the recent March highs. It was a weaker week for milk futures. Class 3 futures gave back the majority of the gains that we saw from last week. The July contract alone traded as high as 18.67 this week and put in a low of 17.93. Now that is just a little bit below last week's low of 17.97. However, we were able to pull above that level again and close out the week at 18.03. Now that is a 55-cent loss, and we did rally 50 cents last Wednesday, so we did take back the majority of those gains. However, we're still holding above those lows. As long as we continue to hold above those lows from last week, we could have a shot at seeing some seasonal strength going forward. Weekly dairy cow slaughter continues to decline, coming in at just 47,800 head for the week ended June 1st. Now that's 9,000 head below where we were at a week ago, and actually 2,100 head below where we were at a week ago in 2012. So that's the 4th week in a row now that slaughter has come in below 2012 numbers. And 2013 slaughter is currently tracking just 3.7% above where we were at in 2012. Now we're continuing to see a seasonal sell-off. However, with the consistency of the numbers coming in below 2012 levels, it seems that there's more of just a seasonal decline here, and we could just be seeing lower slaughter numbers overall. The latest USDA supply and demand report was released this week, and corn yield came in at an estimate of 156.5 bushels per acre. Now that's up quite a bit from the 123 bushels per acre that we saw last year. Now this estimate comes in right at about trend line yield, as you can see here by this green line. Now trend line yield is 156.9 bushels per acre this year, so we're right about on that line. If these estimates can hold and we're able to finish out the season with the trend line yield, that would be the first time since 2010 that we finished at or above trend line. Now the estimates for U.S. soybean yield came in at 44.5 bushels per acre. Now that's actually quite a bit above trend line yield. Trend line for this year would come in at 43.4 bushels per acre. Now that's quite a bit above where we were at in 2012, coming in at just 39.6 bushels per acre, and again would be the first time since back in 2010 when yield would come in at or above trend line yields. If these yields are able to hold, it would mean that we'd probably be looking at some lower prices come fall, back to more historically normal price levels as far as corn and soybeans go. Looking at the week ahead, we have a milk production report released on Wednesday, and also the monthly cold storage report will be out on Friday. So tune into next week's video for a recap of these reports. That'll do it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, thanks for watching and have a great weekend.